Vedanta Saga, Viceroy Research. Viceroy Research has stated they are short on VEDL. VRL, Vedanta Resources Limited, promoter of VEDL Vedanta Limited. Viceroy Research report counts down to 87 pages. Here's the crux of it. 1. VRL is draining VEDL. It is eroding the fundamental value of VEDL as it is the primary collateral for VRL's creditors. 2. VRL forces VEDL to give dividends, draining its balance sheet. VEDL has reported shortfall in free cash flow to the tune of $5.6 billion. 3. VRL is pushing VEDL to the brink of insolvency. 4. VRL debt is $4.9 billion. Interest on it is at 15.8%. The current ratio is less than 1, suggesting liabilities are greater than assets. How is VEDL used? 1. Higher dividend payouts. 2. VRL loans taken from VEDL subsidiaries are written off. 3. Forensic investigation reported book value is fiction. Subsidiaries. 1. Fujairich Gold. Suspected money laundering of illicit gold from India. 2. International zinc assets. 1. Scorpion mine of Namibia has been non-operational since 2020. 2. Black Mountain. Inflated its balance sheet ahead of debt raise. 3. Konkola copper mine Zambia. It's said to be insolvent and unviable. 4. Talwandi Sabo Power. Its liabilities are $350 million and it concealed $150 million from the list of creditors. 5. ESL Steel. It's a loss-making unit acquired by VEDL. Audit opinion suggested material uncertainty related to going concern. It also has the threat of losing permits over environmental violations. Title deeds for forest land purchases are in the name of the company, but the title belongs to the Forest Department. 6. Hindustan Zinc Limited, maybe biggest license. VEDL triggered an event of default by failing to build a mandated smelter, risking a sovereign call option where the government of India could buy VEDL's 64.92% stake at a 50% discount, or force VEDL to buy the GOI's 29.54% stake at a 50% premium, $10.66 billion outflow. While HZL's resources are allegedly looted through related party deals and unjustifiable brand fees. Company announces multi-billion-dollar plans in trendy sectors like semiconductors to justify debt raises but diverts capital to VRL dividends, delaying and underfunding projects.
Red flags. 1. Senior management resignation. 2. Compromise auditors. 3. Number of legal and regulatory challenges. 4. Violations of transfer pricing laws. Hindustan Zinc Limited is paying 5% of its profit over past 3 years for a brand it doesn't use to company with London office that remains empty. 5. VDL brand fees to VRL are greater than industry norms. 6. Loans from VDL to VRL used to try to delist company later was used to buy shares from open market to buy control. 7. VDL's previous actions also show a pattern of desperate attempts to remit cash to VRL, sometimes circumventing directors and minority shareholders. The sale of VDL's International Zinc Division to HZL. The purchase and sale of VRL's Anglo-American Mandatory Convertible Bonds. Loans from Trafigura and Glencore. Accusations of corruption and disinvestment fraud. On April 28, 2022, the CBI named HZL, its acquirer Sterlite Opportunities and Ventures Limited, SOVL, and unknown public servants in a case involving alleged cheating, conspiracy, and criminal misconduct. CAG said HZL was sold for 30 to 35 per share, but could have fetched 1,000 per share. The offshore network, shell layers, nominee control, and compliance arbitrage. Used Corp as a compliance infrastructure structure, it is named in several scandals. Like Corp, IQEQ plays an important role in Agaval and Vedanta's offshore structure. Director for hire, for name's sake. Conclusion. In financial terms, a projected FY26 cash flow waterfall based on generous assumptions shows a funding shortfall of over $1.3 billion. Even assuming $3 billion in operating cash flow, VDL cannot meet its growth capex, interest, and debt repayments while continuing to pay dividends and brand fees to VRL without external funding. Vedanta has done several financial frauds and engineering. 1. TSM Bloom Fountain Operation. Offshore debt washing and liability erasure. 2. The Aluworks episode. Takeover attempt funded via VDL proxy. 3. Brockway Inc., a historical shell with ties to suspected regulatory breaches. 4. Disinvestment failures, the cases of Balco and Hindustan Zinc Limited. Share prices of group companies fell drastically on Wednesday, 9th July 2025, on the back of such a report. However, VDL has rejected all the claims and has stated it baseless and malicious.